Welcome to the Rand Squad CU morning briefing for Wednesday the 24th of June 2009. We've just gone through 8:30 now here in London and just taking a quick check round the markets and what we've seen from the overnight news. At the moment, stocks were pretty much mixed as lower at the moment. We did open slightly higher. However, some of the pharma stocks are weighing on a sector basis across Europe. Just a bit of a turn for some of those defensive stocks from yesterday. And taking a look then onto the overnight news, obviously one of the main factors today is going to be that FOMC rate decision. A couple of press pieces noting that the FT writing a policy on hold as Fed weighs up a cycle of easing, with the message today according to the FT to be clear that the US Central Bank is now on hold following what was by many measures the most aggressive easing cycle we've seen in monetary policy history. As well, we'll see if the Fed will make any comments in terms of dampening speculation of raising rates anytime soon, which was one of the main talking points of last week's sessions. Before I get into the US in deeper coverage, we'll just take a look in Asia, because there were some comments out of the Bank of Japan policy board member Nakamura, who did make some interesting comments. He pointed that corporate financing conditions remain severe despite any recent improvements. He was also quick as well to put aside any ideas in terms of exit strategies or ending extraordinary measures which are beyond or due to expire in September. And he also signalled at this time the Bank of Japan is likely to buy any further into JGBs. Also as well this morning, although it is something we did see yesterday, Bloomberg ran for the first time those headlines from Moody's that US's AAA rating remained solid and that there was no alternative to the dollar. However, as stated, they were released yesterday's session and we haven't had any real market reaction there from any of the Asian participants. Elsewhere then in the US, noting that Obama said late yesterday that they do not need a second stimulus package as yet, and he did point out as well it's clear that unemployment will end up going over 10%. It's pretty much the same as the White House comments that we saw at the beginning of the week. And also the Securities Industry and Financial Markets Association, SEFMA in the US, they gave their latest report on the US economic outlook. They pointed to GDP to fall 2.7% year on year this year, with the jobless rates averaging at 9.8% next year. And interesting, heading into the Fed, according to the SEFMA body, they say that members do not see a rate hike until the end of next year. Also, one of the main focuses of yesterday's session, which did help put a bid into US Treasuries, was a very aggressively bid 2-year note auction, and we'll be looking at whether the 5-year $37 billion auction from the US can follow suit later on this afternoon. And in terms of ECB headlines, we have seen, according to Axel Weber from Germany, ECB's first ever 1-year refinancing operation will draw strong demand and should ease calls for short-term liquidity. We'll be looking out for those results at around 10:15 to 20 past 10 London time this morning. And González Paramo pointed out that he wants to implement a wait-and-see approach in terms of the unconventional measures that have been made thus far, and also that policymakers have not yet decided if 1% is the floor for interest rates. One of the main things we have seen this morning, just at the European Cash Equity Open, did see quite a sharp fall in terms of the dollar index. It hit lows down 0.4%. There was some talk in the markets of Middle Eastern central bank buying of euro and sterling against the dollar. And then we also saw euro-dollar new session highs at the time were printed just underneath the 141.50 handle, after some technical stops were also triggered, aiding that move. So looking ahead today then, the main data in terms of what we're looking at for this morning, we'll see the OECD releasing their May economic outlook. Obviously we'll be seeing whether that can follow or reflect anything that we saw from the World Bank, who did cut their GDP forecast for 2009 and 2010 for the major economies, including the US, Eurozone and Japan and the UK. That was on Monday. And then for US data today, we'll be looking furthermore to the housing data. New home sales for May, they're due at 3 o'clock London time, followed by the oil inventory levels at 3:30, and then the all-important FOMC rate decision, that'll be due at 7:15 London time.